Let's be honest. A lot of life insurance companies might say that they're growing right now, but not all of them can say that they are winning. Well, Penn Mutual is winning. So the real question is, what's driving that success? Is it the product, the field support, the technology, this podcast? Or is it something less obvious, something many carriers are missing, but it's making all the difference? Because if you're a financial professional, you already know that this market doesn't reward good intentions. It rewards execution. Speed matters. Service matters. And support behind you matters more than ever. So today, I'm sitting down with our very own chairman, president, and CEO, Dave O'Malley, and we're breaking down what's really contributing to the winning and what it means for you in the field.
Life Matters, a Penn Mutual podcast for financial professionals.
Welcome to Life Matters, a Penn Mutual podcast. I'm your host, Bill Bell, Vice President of Advanced Sales with Penn Mutual, and I am so pleased that you chose to join us here today. Now, coming off another amazing year that we had here at Penn Mutual in 2025, I thought you as our listeners might want to know what's driving that success and what are we excited about here in 2026? Who better to have to answer those questions and a whole lot more than our chairman, president, and CEO, Dave O'Malley. Dave, thank you so much for joining us here today.
Bill, great to be with you.
So first question, we had another amazing year in 2025. What are some of the things that you would say you are most proud of what we did last year?
It was a terrific year in 2025, both operationally and financially. A lot of things to be very proud of. From a sales success perspective, we crossed for the first time the $300 million mark in life-weighted premiums, so a great accomplishment there. On the annuity side, 10% above goal. We set records for gross dealer concession out of the wealth management unit. So really good growth in all of the metrics that really fuel the company at the end of the day. Revenue, asset growth, life insurance in force, renewal premium, all in that sort of lower double-digit range, I would say, is really where most of those things came in. And then financially, CFO sign-off is actually tomorrow, but I have a very good idea. So my last one-on-one was with Rick Klenk, our CFO. And so I'm not going to share all those numbers, but we had a very strong year, both on a GAAP and stat basis. One headline number will be that stat surplus came in just under $4.7 billion, up over $300 million on the year. So I can remember back to when I started with the company, we didn't have $300 million in surplus in total. So really good year of performance for the company. So couldn't be prouder of the team and happier and about where we stand going into 2026.
Yeah, you say all the time that these days, every year, Penn Mutual grows one Penn Mutual versus when you started. And what does that really mean to you as somebody that's been with the company for a long time and for the financial professionals that we work with?
From one perspective, it's just really cool to see the fact that we have been able to grow consistently. I very much believe that this is a stacking business, right? So good outperformance versus the industry, outperformance versus your peers. You keep doing that year after year after year. In 1 year, it doesn't look super impressive, but you stack that up over decades, 10, 20, 30 years, and you can really see some impressive growth, impressive performance. For financial professionals, I think it really shows a few things. One is our ability to remain relevant, that our strategy of how we go to market, our product performance to the end policyholder and consumer has been really strong. And that has really driven that. And so I think if you look at it in all those lenses, it's great to have that type of good, strong, healthy growth. And I think that's where we'll continue to target in that upper single digit, lower double digit growth. I think that's very sustainable and repeatable while keeping an extremely strong balance sheet.
You mentioned earlier that we broke $300 million in sales for the first time ever last year. I joined the company in 2023. Every year that I've been with the company, we've broken the previous sales record. I would love to say it's because of me and this podcast, but even my ego's not that big. What would you attribute that success as far as sales growth to? Is it really just our amazing field leaders? Is it the Penn Mutual value proposition as a whole? Is it how we kind of strategically pursue certain business lines and eschew others? I mean, what would you say is kind of that secret sauce?
It's all those things, Bill. I really think that you can't pin this down on one thing. There's a component of it which is culture. There's a component of it which is focusing and understanding the markets that we're going after, right? I know you brought it up, right? You joining the company, the advanced sales team that you lead, that was really an investment we made because we were serving the advanced marketplace, and to be able to bring in talented professionals that bring great knowledge. The podcast is a great another example to make sure that we're getting the word out about not only what we do, but what's relevant to our customer, the financial professional, is really critical to continue to build on that momentum. So I think it's not just one thing. It's not just a few things. It's really all those things. And the more that we can get those things to be in alignment, that we're able to talk very openly about what our strategy is, which then also lays out what our strategy isn't, then we can make sure we have the right people involved that have the right belief systems, and we all stay focused on continuing to moving the ball forward and where this business is going, because there's amazing opportunities in the business, as you and I both have talked about quite a bit. But then we have to go make those things a reality, because we can't drive the car through the rearview mirror. We have to look at what's next. We have to look at it, and then having professionals that are motivated in alignment, whether that's in the home office, with our amazing field leaders that we have engaging with financial professionals, with our distribution relationships that we have. It's all those things working together.
I think if you were to ask 10 different financial professionals, they would give you 10 different answers in regards to why they love to work with Penn Mutual. Some will say, we love ACE. It's the best system for submitting business. Or we love the underwriting department at Penn Mutual, or we love our field leader, or we love the advanced sales area. There's just so many great things that we offer to financial professionals. But one of the things that we also offer is a very diverse set of products. Is that diversity in regards to product offerings intentional? And if so, why?
Very much so. I think that we've been focused on building out a diverse portfolio of products so that a financial professional can understand and know the Penn Mutual story and know that we have an arrow in our quiver to solve their customers' needs, so that they can look at it and say, oh, we're not just the best company for whole life. We're not just the best company for IUL or VUL, but that we have good, strong, competitive products that work well in the advanced markets that solve complex financial needs for consumers. And so that has been an evolution. I mean, I can remember back to in the 1990s, we were over an 80% VUL company. 5 years ago, we were down to a 2% VUL company. As we sit here coming off of this past year, we were about a 25% VUL company, right? And so at times we've been high in universal life with guarantees. Then we've been low in that product, right? We don't sell much of that these days. But whole life has kind of been there, and it was a sub 10% product when we got into the late 2008, 2009 period. And that's grown as high as 50 and now sits at 35%. So why is that important? Not only because it gives consumers choice, but it also allows us to make sure that as we develop products that we look at changing preferences, changing market trends, and allows us to pivot and have consistency. Back to where I started. The more that we do to have consistency and continue to perform in a step by step function, the better the performance is of the company. There's also internal benefits, different drivers of profitability, different drivers of crediting strategies that are in these products. So diversification is and always will be your best and cheapest form of risk management.
Yeah, I was just going to ask you about that last line, because you say that quite frequently, but I think it's true. I mean, just for where I sit and I deal with advanced planning in my career, which is now almost 25 years long, I've seen strategies that have been focused on VUL, and then it's switched to no lapse products, and then it's switched to IUL. And having places to pivot to from a strategy and a product standpoint is absolutely the right way to have a product portfolio set up, because if one product line falls out of favor and you don't have anything to pivot to, you're out of luck, at least probably for a year, if not 2 years, until you're able to get something up and running.
Absolutely. And so you think of the long development cycle, and we've done things to bring down the product development cycle, but at the end of the day, regulatory filing and approvals is a fairly long process, and you can't really speed that along. And so you are looking at a north of 1 year time from the time you sit down and say we're going to do something to it's actually approved in the market. That's a tremendous amount of time if you only have one thing and it's now out of favor. And so being able to do that, and it's taken us, almost 2 decades to get to this point. I would say this, the desire to really broaden the portfolio started when guaranteed UL went out of favor in around the 2006, 2007 time period. And then we launched IUL and then really recommitted to whole life in the post great financial crisis. And then our investments in VUL more recently. And then we're going to be coming out with a protection IUL with a paid for chronic illness rider this year. So we continue to look at not only if it's the base chassis, it's the marketplace and the advanced planning need that serve, and what are the features that we have that allow that. And then we can just pivot and evolve from there. And financial professionals, are able to kind of know what we have and know also that there's other products if there is a market shift and a consumer preference shift.
I can't go much longer in the interview without asking about Mutuality. I've heard you say, and I know a number of us say, that Mutuality is our superpower. Why is Mutuality so important to the Penn Mutual story, and what does it really mean for our policyholders and the financial professionals that serve them?
Yeah, and I do believe Mutuality is our superpower because at the end of the day, it gives us a clear lens for how we make decisions, why we do things, and what we're looking to drive and accomplish. And it gives us that long-term lens in a business where, right, we make long-term promises. We have promises still on the books today from 90 years ago. So we hear a news cycle that changes every 24 to 48 hours. We have economic cycles that tend to be 3 to 5 years. Now, we're looking at having to go through significant change before we likely pay a claim. So how do we manage the company for the long term? How do we make those decisions and investments today that benefit the long term? And then also, how do we make sure that when we focus on what is important, that we're able to do it through the lens of the policy that we've already written? Because that policy holder is the one that we should be thinking about when we make that next investment, not trying to grow or not trying to return capital back to a shareholder or an equity owner. It really gives us clarity. And I think that clarity allows for us to run a long duration business and do it in a way that's repeatable and sustainable.
So I want to wrap up the 25 discussion here, but one last question associated with last year. Every year is not completely smooth sailing for any company. There's always challenges that come up. What's one challenge maybe in particular that we as a company faced last year that we were able to overcome? And how do we do that?
So maybe I'll give two. I'll give one financial, and then I'll kind of give one that's more operational. I think that all of us in the markets, right, we're looking at the move with tariffs and the market volatility earlier in the year. We spent time actually at our April board meeting bringing in outside economist Dr. Peter Lemon, who came in and really talked about sort of staying focused on that long term, as I talked about Mutuality, staying out of the fright house, right? Because things get really scary. And I think, how do we stay focused and make sure that our investment decisions are the right one for our long-term strategy, our risk tolerance, doing those things that are going to pay off over the long term. And obviously we had to manage through that. And you heard about where the financial results are. If you lose your focus, you can end up really having some impacts by some of these market moves. So what are the big structural changes when you need to make pivots? And then where are more things noise and the fundamentals haven't changed overall? So there's the financial one. If I think of the operational one, we put a real emphasis on top tier service and really making it easier to do business with us and enhancing all our touch points. And that's never a straight line. We have operational things that break every day. But being able to really take that and, Stephen Kennedy and his leadership team have done an amazing job of really saying, how can we take these instances and learn from them and bring them into our process so they don't derail us, but they actually show us the path forward to enhancing our operations. So I think taking those things that invariably come up that are challenges in any business and reframing them into where is the opportunity for the future here is absolutely something that I think the organization is doing. a great job of today that I think is something that really we put into our institutional memory here during 2025.
Yeah, absolutely agree with all of that. All right, so you're not just a expert in regards to all things Penn Mutual. I consider you an expert in regards to the industry as a whole. And so I want to bounce around and ask you a few questions here that are not necessarily specific to Penn Mutual, but the industry that we work within here. And I'm going to start with the tax reform. So obviously, we had tax reform last year. My team was a big part of kind of the Penn Mutual response. I know that you had a lot of discussions with people in Washington. How do you think we came out the other side in regards to tax reform? And would you agree when you hear people say that right now the industry is as united as it's ever been in regards to kind of that legislative and regulatory framework that we see in Washington right now?
So I think that as we look at kind of how tax reform went, we fared very well. Right, the changes that went through were positive for the industry. That we haven't been able to say that through tax reform over the last several tax iterations that have happened. I do believe that the unity that the industry showed was very much conscious. It was thought out. It was intentional and had the desired result, which was that we knew that if we fractured, if we knew that whatever the issue was, illustrations, capital, right, private equity in the business, different views of how we should regulate the business, whatever that topic was, and us splitting was only going to lead to us being fractured during this tax reform process. So I think the ACLI on the company side, and then FinSecca are doing an amazing job of unifying the industry through the financial professional side, and them and the industry, the companies and the financial professionals staying unified during tax reform really had great benefits. And I think it's a good model that we should continue with because we have such amazing opportunity in the industry. But when we get too competitive, when we start to highlight too much the differences, it is a complex industry. And that sort of division can absolutely cause you problems in Washington because small changes have huge impacts. And we saw that potential and some of the things that happened during the 2017 Tax Cut and Jobs Act that could have had huge impacts on key portions of the industry, right? Huge impacts on our reinsurance partners, right? Not even the direct companies, but through our reinsurance usage and how those companies operate globally. Those small changes really put the industry under significant pressure. And so I do believe that unity is there. I think it's something that we should continue to stay focused on and figure out how do we work through our differences in the most constructive way.
Totally agree. I think that the One Big Beautiful Bill Act or HR1 or the Triple B, whatever you want to call it, was absolutely an overall win for the life insurance industry. I think that from a planning perspective, we've talked about it quite a bit, but I think that we're in a good place for financial professionals and clients both to move forward with planning now that we have some certainty in regards to those tax rules. Well, another thing I love to talk to you about is finance and interest rates. And we're probably looking at some rate cuts here later in 2026, or I guess it depends on who you ask. Obviously, the administration would like some rate cuts. There's some data in regards to inflation that maybe might suggest rate cuts might be coming, might not be coming. Where do you think we go with the Fed? Do you think there's nothing that's going to be done until there's a new chair? What do you foresee from an interest rate perspective in 26?
If I totally knew the answer to this question with all the prediction markets now and everything else out there, there's a lot of great opportunity to affect that trade. But I do think there's some big themes that we're thinking about. Collectively, I think we view that the economy is in pretty good shape. There's obviously a lot of geopolitical noise that's out there, but the US economy continues to be the growth engine of the world. Obviously, the AI revolution and the investments there is kind of pushing that forward and hopefully bringing up productivity, which also then will help growth, but also do it in a rate that keeps inflation managed. So when we think about inflation, I think inflation is coming down, but it will be sticky in that coming down path. We've seen that already. I think that next mile between, let's call it just under 3% today and 2% for the Fed target will not come fast, but it will probably come in a little bit of fits and starts pieces. And then employment remains pretty strong, right? It actually has picked up since the weakness maybe over the late summer into the early fall. So I do think we'll get more rate cuts, more so because of the change in the composition of the Fed and the belief system, kind of, and the metrics that are being brought in to make those decisions. Because it does seem to this point that the cuts that we've had have not had a negative impact on inflation. I do think it's going to be a slower and elongated process, but with a downward trajectory on the front end of the yield curve. That will probably also end up putting a little bit of pressure on the long end of the yield curve. So you'll see there'll be a steepening of the yield curve, which we've already seen, but I think that trade will continue as we move through the year. But a lot of things to work out. Obviously, naming of the new Fed chair, the Supreme Court, as we're filming this, right? Supreme Court uncertainty around tariffs, all those things are sort of X factors. But I think the underlying fundamentals signal good continued economic growth with probably declining inflationary pressure, which should be good for risk markets, should lead to a steeper yield curve and opportunities to take advantage of a robust economy.
Last industry related question here. You mentioned in your last answer AI. Obviously, you can't turn on the news regard just about anything and not hear AI come up. It's driven the success of the stock market over the last 24 months. And I think that there's a lot of confusion and a lot of questions in regards to what AI's places in the life insurance industry. What are you seeing now in regards to the utilization of AI, and where do you see this going?
I think that we're very in the early innings, to use the baseball analogy, of the AI revolution. For us as a company, right, we've been rolling out Copilot behind our protected firewall, right? We're a cloud-based company, so we work with AWS. So our private instance of Copilot, so we can leverage our internal data and do that in a safe and responsible way. And we've been really looking for employees to be able to use that more to find productivity gains. So I think in the short term, right, it's a lot of productivity. It's, can we do jobs smarter? Can we streamline things, right? To have AI help write it and craft an email, right? It's not doing it on its own, but it's helping take out time to provide a structure and then edit an email, as an example. Do a meeting agenda. I used it the other day to do a spreadsheet, right, where I could have started from scratch, but actually it did a pretty good job of putting together the basics of a spreadsheet that then I was able to update for the purposes that I had. And then I think the other area where I see some shorter term impact is going to be also around knowledge based tools, being able to bring the cumulative knowledge that we have in so many places to people's fingertips faster, right? Think of our customer service folks, our underwriters, those processing transactions, being able to bring up policies, practice, information that way. And our vendors are doing that in a big way as well, right? Our vendor solutions, whether or not that's Five9 for the call center or Workday, they're all implementing AI within theirs to make things faster, smoother, and to be able to add more value within those packages. So I think that's where we're going to see a lot of the trends in 26 and 27. It will continue to give more and more tools, right? If I think about the revolution of technology, it has provided more tools to everybody in the value chain in our business, whether or not that's to financial professionals and thinking about, right, we used to have rate books, then we had illustration systems. Illustration systems were on discs, right? Then they went to CDs, then they now went to the internet. You saw all this change in the median of which information is transacted. AI will just be the next component of that. So it's going to have an impact of all those places that we do in business. How we look at competitive illustrations, how we compare products, right? Products, you and I have had this conversation, are legal contracts at the end of the day. They're regulatory filed legal contracts. Being able to look at those legal contracts, right? It's changing the law profession. Being able to put those contracts in, what are the differences? What are the nuanced features that are out there? The difference between guaranteed and non-guaranteed elements, making those things more accessible and more easy to find. I think AI is going to play a role in all that. It's also going to play in the role of how we actually build product, how we end up thinking about pricing, how we're able to do more formulas quickly, how we test, how we build out code. And it'll really put an emphasis around data management, which has been a trend now for really the past 30 years in the industry is really being able to access the industry's data more flexibly. And you brought up ACE earlier, right? ACE is a game changer for us, and we've had it as a differentiating product, and it's really because of our data management capabilities. Well, those data management capabilities make us more AI ready than others because we're able to have that version of truth that sits over top of a lot of our legacy systems. So AI, don't totally know where it's going to go. That's going to be interesting to see, but you definitely see that it will have a meaningful impact on all the touch points of our business.
Yeah, I agree. I don't think that any industry is going to completely be unaffected by AI. And I definitely think that our industry is going to for sure. All right. We invited you on, Dave, not just to talk about 2025 and the amazing year that we had, and not just to talk about the industry as a whole, but we want to look forward here to 2026. You and I sit here in late January. This episode is going to be released sometime in mid to late February. So we'll still be very much in the first quarter here. From a Penn Mutual perspective, what are you most excited about in 2026?
Bill, with that setup, I was totally expecting this is where you were going to talk that my Eagles are out of the playoffs and your Rams are getting ready for the NFC Championship game. But we'll go excited with Penn Mutual. I figure the football's coming. But 26, I think what we're doing in top tier service is going to be a differentiator. It already is, but it's only going to become more and more visible to others of how we can differentiate are the touch points that you have with Penn Mutual and all the touch points. I'm very optimistic about what's happening there. I think it's a true industry differentiating investment that we're making. And I think it is absolutely counter cyclical to what people are seeing elsewhere, where service is being looked at as an expense. We're looking at it as an opportunity to really solidify our value proposition. So that's one area as we go through 26. And there's a lot of some things very small, some things big. But when you start adding those small and big things up, I think if we're sitting here at the beginning of 2027 doing this, it's going to be, wow, that was a huge change in how we interface with the company overall. I also think the continued rollout of multi-life is going to be big for us, right? We're launching basically whole life right now. So we started with IUL, then we have VUL coming later this year. So I think the continued evolution of our product portfolio, our product offerings, what we're offering in the executive benefits space and the business marketplace is going to be another thing that we'll probably will look back on 2026 and say, wow, look how far we've come.
Agree on all that. I didn't want to bring up the Eagles just because I thought those wounds might still be a little fresh. By the time this episode comes out, people will know if I'm very happy about how the Rams season ended or how disappointed I am. But yes, it's a big game this coming weekend here. You did touch on AMP a little bit here, the accelerated multi-life platform. And my team's obviously very excited about that. I know our field leaders are. I know what a lot of financial professionals are. Why did we make that investment to launch that system? It officially launched last year. I think the plan was really to have it kind of full go here in 26. Why is that so important to the company this year and for the growth going forward?
I think even beyond the platform, right? The platform's a differentiator because we really take some of the learnings that we have with ACE and makes it easier to do business with. But I think broader is that the sort of the corporate marketplace for insurance to me has tremendous potential, and I think it's underutilized and untapped, and I think we're starting to see that change. And so having a industry leading platform, having the right products, being able to have the right distribution relationships, I see if you can align all those things together, kind of almost where we started, the more alignment that you can have strategically around all the touch points and all the things necessary to be successful, the better the outcome is. I think this was is a wave that we're going to be able to ride for a long time here in this corporate marketplace with executive benefits, and then riding that into individual planning solutions. So I see more financial professionals using the corporate side of their relationships to drive the individual side going forward than maybe in the past.
Last time we had you on the podcast, I had you do the Penn Mutual elevator speech. Now, you like to joke when we're in meetings and I talk about the podcast that since you were the first episode, it was the least downloaded episode in the history of this show. We were building an audience at that point. Our audience is a multiple of what it was back then. So we have a lot of people that are listening that, either didn't hear you the last time or they heard you after the fact. But we had a lot of people that still listened last time, but there's a lot of new listeners. So for those new listeners, or for the people that did listen the first time and just need a refresher, if you were to give the Penn Mutual elevator speech for why financial professionals should choose to work with us in 2026, what would it be? 30 to 60 seconds would be kind of your time frame for that.
I'm going to start there with also a preface that I'm really hoping that the second time that I'm on the podcast beats the first time at a minimum, because that's always the biggest fear. And I know you built a bigger audience, but as you're sitting here doing this today, it's like, oh, I hope I get more viewers than the first time.
I can almost guarantee that it will be at least 4 times as much, maybe 5. We would love 5. So I'm going to have our marketing team challenged to do a 5 times multiple on the first time.
Which, by the way, is a great accomplishment of the marketing team and yourself, right? You really have, in all seriousness, built the viewership, one of the top financial podcasts out there. So an amazing accomplishment over a period of time, and the high quality individuals you have, bringing content is terrific. So I'll use my 30 to 60 seconds for the Penn Mutual elevator pitch starting now. Look, at the end of the day, we're a 179-year-old mutual insurance company that's focused on doing the right thing for the right reasons. We know that we are able to add value by providing life insurance to individuals and businesses to make sure that their planning and their desires and their lives are changed meaningfully in the event of death, in the event of an untimely demise, and also to make sure that there's generational wealth that gets transferred. We do that through top financial professionals, because we know that the only way that our products are sold is if a top financial professional recommends a Penn Mutual product that's in the best interest of their client. And then it's our job to meet or exceed their expectations by delivering on why they picked Penn Mutual. At the end of the day, if we're able to do that, and we're able to do that with the great people that we have, and we're able to build those long lasting relationships, we invest for the right reasons. We know what's important. We know where we fit in the world. We know why we make the decisions we are. It's a great company. It has great people. And I see the future is very positive.
I think that's a great elevator speech. I'm sold. I do have a couple of questions. I guess it's kind of a beauty is in the eye of the beholder on whether they're fun or not, but I'm going to ask you a couple of non-business questions here. Obviously, you're a very busy person. I think everybody out there has their list of things that they'd like to do outside of business. I think people call it the bucket list these days based on that Jack Nicholson, Morgan Freeman movie, which was a good movie, not a great movie, but a great concept for a movie, I think. If you were going to check 3 items off your bucket list over the next, say, 3 to 5 years, what would they be and why?
So, as many people know who are probably watching this, I'm a big golfer. Bucket list item would be, and maybe it happens, it hasn't happened in 40 years of playing the game, but I would love to play Augusta National at some point here. That is truly a bucket list item for me. Another one that is, I do like cars. And so I think I'll try and make this one happen in the next 24 months, but I'd like to go see the Las Vegas Grand Prix, the F1 race. So I think that's got to be a spectacle that has to be seen. And those are my big 2 hobbies that I have, is golf and cars. So those would be my 2 current bucket list items that maybe are achievable. So we'll see with hindsight whether or not I was able to get either one of those done.
Yeah, those are ones that I hear quite frequently, especially Augusta. I think that's a bucket list item for any golfer. Mine is actually, I'd like to go to a Super Bowl, which is now achievable that we have them in LA every 5 to 6 years. It's just a question of, do I want to pay $5,000 plus to sit in a stadium for a 3-hour long football game? But it is kind of my one item that is still on the bucket list that I would love to do here in a relatively short time frame.
I've not done it either, Bill, because again, the big ticket price, and 2 times the Eagles were there, I was worried about going and then them not winning and then saying, oh, wow, I jinxed them. So that to me has been what's kept me from but I haven't done the Super Bowl either. That'd be a fun one to do. I hope we both get to do that at some point.
Yeah. It would have been pretty great to be in the stands to see the Philly special in person. I think that probably would have been every Philly fan's greatest moment of at least their sports fan life, to be there to see them take down the Patriots.
Agreed, especially for a lifelong Philadelphia sports fan. The Eagles, there wasn't a lot to cheer about for many, many years. And with Nick Foles and the Philly special. What a great way to pull that off.
So last question for you. And this one isn't necessarily a fun question, but it's an important one. And I think that it will shed a lot of insight to our listeners here. You've talked a lot in the past about the importance of mentorship and some of the mentors that you've had in your career. We talked about it the first time you were on the podcast, that you started at Penn Mutual as an intern right out of college and kind of worked your way up. And I think that some of the advice that you've gotten from your mentors and guidance has been hugely important for you. Why is mentorship so important for you? And is there one piece of advice that you can maybe share that you think the audience would really not only get, but get some value out of?
I think as you progress across your career, right, you accumulate knowledge, and people that you interface with have all this knowledge and experience. And history doesn't repeat, but it definitely rhymes. And so what can you learn from those experiences? What can you learn from those that you're interfacing with that are willing to share their experiences, their thought process, to really build up the sort of the encyclopedia of outcomes, the encyclopedia of things to think about, to go back on when you're dealing with things. And the best mentors are the ones who share not only the good things that happen, but the challenges, the thought process that's going on, the fears that are in there overall. And so I think that's one thing, is thinking about being a mentor to some. How do you share the full perspective? Not maybe the, to victors go the story of history, but what actually was the real issues that were going on there? What were the things that you were struggling with? Because those things are invaluable. And the thing that I would say the other is, at times you may be in sort of a place where you don't feel like you have a lot of mentors, or you don't feel like there's something to be learned from everybody. I would look for what that is. I would look for what that is, of whether or not it's something you want to emulate, whether or not it's something you want to avoid, or whether or not it's something you want to learn. There's things that can be taken from all experiences, and they're not all going to be positive across anybody's journey. They haven't always been in mine. But what can you take from that, and how do you apply it for the future from a lens of, of looking at positive intent, positive outcome, and looking for the future?
There was a lot of wisdom in that answer, Dave. Thank you so much for that. I think that mentorship has been something that's been really important to me, both receiving advice from people that have been in the industry and really have kind of seen different things in the past. And then I'm now at the age where I can start to impart some of that on some of the younger people on my team and within the company, because I've been around for a while now, and I've seen things that work and things that don't. And I can share that information. And I think that fits into what you were saying there.
It's funny how that happens, right? I'm not sure where that inflection point happened, but I guess we all crossed that road where I probably should have picked up on it with my gray hair.
Yeah, I'm starting to get it to come in on the sides there. If you could see, I think within a year or two, I'll be very gray on top as well. My grandfather was one of those guys that had his full color in his hair, and then just one morning he woke up and he was completely white on top. So I'm probably well on my way there. Dave, great conversation. Always appreciate the insights. Always appreciate your willingness to come on the podcast. I know the listeners will love hearing what you had to say. Thanks again for joining us.
Great being with you, Bill. Great job to your entire team as well.
Thanks again to Dave. Not just a great leader, not just an industry luminary, but he's just a great guy. If you ever get a chance to spend a few minutes with Dave, he's just a fascinating individual. He knows so much about so much. Just a great guy to talk to, and I really appreciate him taking time out of his crazy busy schedule to joining us here on the show. If you have a question for me or anybody else associated with the show, we have a special mailbox that is dedicated to our listeners. It's lifematters@pennmutual.com. Again, that's lifematters@pennmutual.com. That is a special mailbox that only I have access to. So go ahead and send me an email if you do have any questions. I'm just going to forewarn you, I'm not going to take questions that are sent to that mailbox and forward them to Dave. But if you do have a question for Dave, I might ask him next time I have a chance to chat with him. So go ahead and send me that question, and I'll see what I can do as far as getting it answered. Again, one last time, that is lifematters@pennmutual.com. If you haven't checked out the Penn Mutual YouTube channel yet, come on. I talk about it every single episode. There is so much great content there, including video episodes of this show. Just go to YouTube, Type in Penn Mutual in the search box. You'll find our channel. So much great content there. While you're there, smash that subscribe button. Like some of the videos. I promise you're not going to be disappointed by the content. Speaking of subscribe, if you haven't subscribed to this show on Apple Podcasts or Spotify, make sure you do that so you don't miss any future episodes. And speaking of Apple Podcasts, it is still our biggest distribution system for this show. And one of the things that helps to boost visibility is ratings. So if you stop by and you leave us a star rating, I would really appreciate it. If you stop by and leave us a comment as part of that rating, I'll be your best friend. So for Dave O'Malley, I'm Bill Bell. Thank you so much for joining us here today, and I look forward to talking to you again soon.
Thank you for watching. If you enjoyed this video, don't forget to hit that subscribe button and turn on notifications so you never miss an update.